Alright fellas, this is the video for all of my trade breakdowns that I took today. I feel like I traded my absolute best today that I ever have execution wise. I didn't hesitate at all, and I kind of just really understood what Price was doing the entire time. And I had no doubt in my mind that Price was going to deliver where I wanted it to. So I want to share with you guys the trades that I took and of course the logic behind them. And we'll get into that now. So we had no news today. I wasn't expecting a continuation move in either way, just because we did have that Monday sell-off last week. Having two huge range day on Monday with no news is most likely not going to happen. So that's why I wasn't anticipating price to continue lower, even though I'm bearish overall in the higher time frame. But this is what the 4 hour is looking like, and I skipped. I didn't get to my setup until like 11 o'clock. I woke up late. Wanted to skip like a majority of the morning session, but I was able to catch something. So the 4 hour looked like this. This pretty much is just one big manipulation leg, and if you do use the midnight opening price, you want to be buying in this wick, and that's exactly what happened. You can see that the candle opened here, low, high, close, and that's exactly what you want to be seeing. Now we can anticipate this 4 hour gap to act as an inversion as soon as we get above that, but regardless, that just helps with identifying your bias. Now let's go into the 15 minute. So we had the new week opening gap here, which NQ completely filled. ES also filled this gap, but not absolutely completely, but it was using this order block as support. You can see that to the absolute penny before going higher. So, what I was looking at on NQ was for it to complete its original consolidation or come out and take out its original consolidation, which would be this high up here, which is also a nested. Let me make this easier to see. But which is, that high is also nested within this high. So this would be our sell side liquid or our buy side liquidity pool that we're targeting. If you go to the 5 minute, this is a 5 minute low down here that we just turtle souped. That was inside of this fair value gap that once rebalanced that. But once we came down, took that low, which is that red line, you can see the reaction that we had. And this is where I started hunting for a setup. And we had a change in the state of delivery here as soon as we closed over with this up close candle. Also inverted this fair value gap, and you can understand now that this high up here with midnight is now going to be the draw. So we can mark that out. And this is where I was looking for my entry. So I was trying to get in down here, but I didn't really get a pullback that I liked for a stop loss, like a good risk to reward. But I ended up using one of my favorite tools, which is a standard deviation. And I saw that this 2.5 lines up perfectly with the midnight in line with our high up here. And so now we had our silver bullet zone with this volume imbalance, and right then and there, I anticipated this volume imbalance right in here to act as support. I wasn't expecting price to close below this. Why? We had this 1 minute inversion from this side that already got used. So that's where I was actually trying to get in. Um, but I didn't immediately put my order, and you can see price comes down, ticks that, and then just ends up going higher. And I was looking at the 3 minute as well to see if we were going to be tapping into any other inversion gaps, but I just wanted to get in because I knew exactly where price was going, and that's what I was talking about. I understood that all of these gaps on here were going to be breakaway gaps. These are big speed candles in real time, and now our objective is that midnight opening price. So at 11:32, this is where I did go long on my funded account, and my stop loss looked like this. So I went long right here. My stop loss was at the low of this candle originally, and I was targeting the 50% of this wick. But as soon as I saw that, I moved my stop pretty aggressively. I immediately moved it to an 8 handle stop. And as soon as we came out and we tagged the 2 standard deviation, that is where I did move my stop to break even. So I was completely free of risk. and now you can see I was just letting the trade play out, and in hindsight, I did get out a little too early. I should have. I was stalking ES as well, and I could have definitely took this up to this high for a few extra points, but I wasn't sure how clean it was going to move because these wicks sometimes offer some resistance, and sometimes they do like to stall at the 50%. But I'm okay with the trade that I took, and I'm missing out on like 3 extra points, which is completely fine. You can see what happens once price reaches to midnight in the 2.5. We don't um, we don't get much of a reaction, and then immediately we start to sell off. And that's exactly what I was anticipating to happen. That's why I also didn't want to hold. Sometimes price doesn't have to come up to the midnight. It will just almost get there and then come down, kind of like this situation here before we actually broke through it. But now this is where I got into. Actually, no, this is not where I got into my next trade. I let this play out. We started to push a little higher here, and once we came up into some of these higher time frame PD rays, we have this order block here, and I believe there's a fair value gap as well somewhere. No, there's not, but we ended up taking out this high, which is always good. You want there to be always a sweep of liquidity before I move in the other direction. And the reason why I was able to actually short this now is because of 2 reasons. So the one most important is that we had SMT at a key level. What's the key level? All of these clustered highs up here were above the 830 and the midnight. We're in a deep premium of this dealing range. And more importantly, we had SMT between NQ and ES. So if you look at the 5 minute, this was that original consolidation high that I was talking about, that NQ is most likely going to take out today, which it did. This was the high that started this move lower. So we're going to seek this high once we get our lower time frame aligning with the higher time frame. You can see. So why did I look short after just taking that long? Well, here is ES's original consolidation right here. And you can see here's 1215. ES took that already, while here's 1215. NQ is very far behind. And that's all I needed to see. Once I see SMT and then I get a signature in price like this, you could actually have been short right up here. As soon as we get this close below this last up close candle, that's where you get your change in the state of delivery. So right here, you can see price uses this up close candle as resistance. Hits the 50%. Let's see if we get like this. Almost. But hits the 50% and then sells off. I did get the safer entry. SMT plus the entire. I like to normally use the series of up close candles before a move like this, just because we've been in such a strong bullish environment like that move up. I don't really want to short too early, but SMT and time is what is going to be your friend. So what do I mean by time? During the lunch hour, especially if you just expanded like this all through the morning session, you can anticipate some kind of retracement back down to a discount of the range before heading higher if your bias is still higher. Why is our bias still higher? Because NQ needs to complete its market maker uh, buy model, and once it does that, the model will only be complete once this 5 minute high is taken. So I got in short inside of this inverted fair value gap and inside of this regular fair value gap. As soon as we got this close below this last series of up close candles here, if I draw that out, you can see that. Look at the bodies of the candles respecting this inversion really nicely. It does wick up, attack this order block first, but my stop loss looked like this. So I got short right here. My stop loss was up here like 14 points, I believe. And my TP was at 42, just a few points above the midnight, just in case, once again, it wanted to maybe not hit that. So I'd rather be safer than sorry. But that was the second trade. And then this is where I took a 5 minute paper trade. a 5-minute setup on a paper trade account just because I was content with enough. I didn't want to overtrade on my main account. I didn't want to blow the gains that I had just in case the setup didn't work out, because none of this stuff is guaranteed, of course, but the odds were definitely in the favor of this trade. But this is what I was anticipating. So my bias was still bullish because, like I said, I wanted NQ to complete its market maker buy model targeting the original consolidation high. So when price is in a discount, which it is below the midnight opening price, smart money sees that as a discount. What do we have below? We have a discount PD array, 5-minute fair value gap, and a 5-minute order block right here. And taps into both of those. And I got filled I put my fill order right here at 37 on my paper trade account. My stop loss was below this candle here. So this is what this looked like. Stop loss was here, and my TP was at this high. And of course, you could have held a runner to the high a day, but this is also just a paper account, and I only took one contract. But I did end up getting my take profit hit, which was right there. And it's a beautiful 2-hour trade. Just understanding that the midnight is going to be where your drawn liquidity is. You can see the bodies of the candles respecting that price level. It's always time and price. And what did I say? What happened during lunch? A retracement during lunch to continue that buy model, and that's exactly what happened. More importantly, we also had this breaker here, and that's what also gave me more confidence. So I had a unicorn set up with the midnight opening price. That's a deep discount to smart money. Even though we're not in a deep discount from this range, right? You can see it doesn't come back to a discount in the fib range, but we understand that the midnight is good enough, and that's exactly how smart money operates. So the next trade that I took was on my options account, and this is what this looked like as well. So once again, I was content with enough on my funded account, so I was going to take a trade or stab on it on my options account just because I wanted to see how these contracts would move, and they moved pretty nicely. But once again, I had that 5-minute entry. I understood where price was going. I needed that 5-minute high on the original consolidation to get hit. That's where I draw on liquidity. So what did I do to try and find an entry? I used my silver bullet zone, understanding that these PD rays up here, along with this last up close candle, that would be your breaker. See if I mark that out, you can see where price is bouncing from. And now all of these lows inside of here should be left open, since you can see that all this area is balanced, and we have our 8:30 and midnight. So this low dipped below one more time into a premium or a discount for smart money before rallying higher, and now you're able to buy in a premium, quote unquote, of the range before price hits its final objective for the day. So I took QQQ 1-day contracts right here. I got filled at 309 on the QQQ, and I didn't sell until right then and there. And looking back at this once again, even though I had one contract on my options account, so I did want to just sell here and not hold, but you could have definitely gotten more out of this play, and I'll go over why. So here is 1 o'clock, 110 right here, and ES was very strong. It was much stronger out of the bunch today, and this is what I was looking at. So we had relative equal highs up here that we're not taking yet on ES. But once again, if you use your standard deviations, you can see that price was inside its silver bullet zone here, and the objective when price is in the silver bullet zone is most likely going to reach for the 2 standard deviation, especially when there's liquidity that lines up with that. And what do we have up here? We have an order block, and if I draw that out, you can see that gets hit to the penny. The body of the candle literally hits that to the absolute penny on ES. And We have our 2.5 standard deviation. This is where we can anticipate a reversal, and that's exactly what we got. This is ES and NQ completing its market maker sell model or buy model, excuse me, and that's why you could have held this NQ trade for a little longer, just until you could see how how much higher it went up, just because ES was just finishing its buy model as well. So this is why these standard deviations are very important. You can see price, the bodies tell the story. Price closes right on that 50 level, 73.50, and then ends up selling off, and then just chops around for the rest of the day. But those were all 4 of the trades that I took. I took 2 of my funded, 2 of my personal, and that was the entire reasoning behind this. If this doesn't show you that price is very precise, and um, I don't know what else to show you, because uh, price is not random. This is all predetermined, and it's very, very nice to learn. And once you're on side with smart money, you will thank yourself later. But the draw on liquidity is most important. Understanding time and price as well, and the midnight opening price on your chart is very, very helpful. But I hope you guys enjoyed this video, learned something. If you have any questions, comments, concerns, let me know down below, and I'll see you in the next one.